of the week should be no stranger to our Canadian small cap clients. So that company is Aritzia Inc., symbol ATZ on the TSX, trades around $56, $6.4 billion market cap. But what does Aritzia do? They were founded in 1984 by the Hill family. Aritzia is a long-term growth-oriented, innovative design house and fashion retailer with exclusive brands targeting primarily towards the women in the range of 15 to 25 range. Aritzia operates 130 stores across Canada and the US, in addition to an established e-commerce platform. Aritzia is a strong niche player in the fragmented industry. It differentiates itself through integrated model encompassing conception, creation, distribution, and direct to consumer retailing. Why is Aritzia our star of the week? Well, this is just over the past week, an 18% jump last week. I will get into what drove the jump in a second. But I think it's important to put the move in context of what has been a very volatile year for Aritzia and for most retailers generally in the face of a tariff war. This chart shows kind of a circumference way to get to being up about 5.4% this year. Lows in the $38 range to highs in the $73 range. Again, all to end up just up over 5% this year. But that's what you get in an uncertain demand and supply chain environment driven by tariff fears. It's probably also relevant to point out that this is Aritzia's performance over the last 5 years. So extremely strong performance, up 275% over that time, particularly when we witness this performance against a couple of the more well-known and well-publicized Canadian retail names over the past 5 years. One being Lululemon Athletica, great company, but just up 27.6% over the past 5 years. So decent performance, but nothing close to where Aritzia is. And finally, if you look at Canada Goose over that same period, it has been an iconic name in Canadian retail segment. It at one point was a stellar performer. Now, over the past 5 years, it's down over 63%. So at the time, 5 years ago, 6 years ago now that we looked at this company, we also looked at it against Lululemon and against Canada Goose, found it trading at a more reasonable valuation, found a more solid growth path ahead of it, and certainly has been the pick of the litter of those three over the past 5 years. Okay, so let's take a look at the strong fiscal year 2024 Q4 results, which drove Aritzia's share price higher over the past week. Okay, let's take a look at the strong Q4 fiscal year 2025 numbers, which drove Aritzia's share price higher over the past week. Net revenues overall were up 31%. In the US, net revenues were up 48%, retail net revenues were up 24%, and e-commerce revenues were up 42%. Gross profit margin, which has been a real story for this company over the past year, we're up 420 basis points. Adjusted EBITDA was up 121%, and adjusted net income on a per share basis jumped to 83 cents per share, up from 34 cents in the same period last year. Let's take a quick look at the balance sheet here. Cash of about $285 million, debt of just $3.8 million, lease obligations of $922 million. That's a strong balance sheet, significant net cash outside of the lease obligations here. Guidance or outlook for the fiscal first quarter of 2026, Aritzia expects revenues of between 24 and 28% up year over year. Gross profit up about 200 basis points. Prior, it was expected to be up 58 basis points. SG&A as a percentage of revenue to be less or minus 100 basis points, roughly where it was prior published, and adjusted EBITDA margin up to 14%. Prior, it looked at about 10.8%. So guidance or outlook for the full fiscal year 2026, revenues around 11 to 19% year over year, which is up over or in the range of consensus. Store openings, a minimum of 12 new boutiques and 5 repositions. That was expected. Adjusted EBITDA between 14 and 15%, right in the range of prior published, and CapEx about 180 million, close to the prior published 182 million. The takeaway here is annual forecasts broadly were unchanged, with better first half of 2026 offset by accelerating gross margin headwinds in the second half as tariffs really could take hold. Now let's look at tariffs, as that was a major question on the company's conference call. Now, management has been very proactive in diversifying the company's manufacturing base in recent years ahead of the tariff situation. Now it is shifting some of its supply chain away from China, which has been hammered with triple-digit tariffs from the US. China is one of the top 3 countries that Aritzia relies on to make its clothing. It's estimated at the start of this year, heading into calendar year, about 50% came from China, but it intends to cut back its production there to 25 to 20% in that range for the upcoming fall winter season. So a significant shift already. Impressively, management estimates its reliance on China will fall even further by this time next spring, when Aritzia predicts just a mid-single digit percentage of production will happen in China. As part of that diversification, the CEO commented that the business will turn to long-standing partners in the 12 other countries that it operates, like Vietnam and Cambodia, where Aritzia produces clothing. It will also explore new countries and broker relationships with new suppliers that can improve its existing products. Again, this is an impressive pivot over such a relatively short period of time. So let's take a look quickly at the valuations here. Based on a trailing basis on actual numbers, just under 30 times adjusted earnings. Based on this year's expected earnings, about 24.8 times, and next year's about 18.6. We'd say there's a high variability in that estimate right now. These are relatively reasonable valuations in a vacuum, but we are not living in a vacuum at present. I'm going to give a quick conclusion here. Fiscal year Q4 2025 results were very strong in terms of revenue, margin improvement, and EPS growth. The company has reasonable valuations in a non-tariff environment or in a vacuum, but again, we're not living in a vacuum. It's almost certain weakness to see creeping in either the current quarter or by the year's end as the consumer pulls back spending in an uncertain environment. It makes this high quality business. Again, it's a high quality business, but it makes us a hold in the near term, given the uncertainty in the second half of this year.
Yeah, and I mean, I guess generally it is nice to hear that their supply chain is a little bit nimble. Compared to if we look at like Canada Goose, for example. Again, when I covered them on the podcast not that long ago, I didn't know. I mean, maybe all of our listeners knew and you guys knew. I know Ryan knew, but I didn't know that Canada Goose manufactures all of its clothing in Canada. I didn't know that. So that is one thing that at least it is nice that Aritzia can be more nimble in just all of this uncertainty.
Yeah, I mean it's
like a lot of. Sorry, I was just going to say, a lot of people, just generally speaking, ask about, what industries are you interested in, what sector categories should we be investing in, and a lot of the times it doesn't come down to the industry category, and I think that Aritzia is a really good example of that, because typically we've not been positive on the retail space in general, particularly the brick and mortar retail. But even within areas where, the overall industry isn't necessarily attractive to us, there are individual companies with specific niches or growth strategies that we do find attractive. And Aritzia is a good example.
Yeah, I mean, this combines, at the time we recommended it, $16 about 6 years ago. It combines a reasonable valuation at the time, good balance sheet, and just an excellent management team that has had a great brand that they've cultivated over time. And they don't really close stores, they just open new stores, but they don't do it at a crazy pace either. And that they deliver on their stated numbers. Yeah, it's impressive that they're able to go from 50% basically in that range supply from China down to mid-single digit percentage of their production will happen there over just over a year period. Again, that is impressively nimble supply chain that they're able to rely upon, which, should there be further tariffs at some point, they can move around and shift that around.
Mhm.
It is impressive they're able to do that. And it certainly, bodes well for their growth over the long term. It is, like Aaron said, it's such a difficult sector, retail, to stay ahead of trends. To, Canada Goose may be making a great product, but if people suddenly say, I don't want to be seen in Canada Goose anymore, like, it doesn't matter. The trend goes against you and you're moving out. And one of the things that Aritzia has been able to do is, it's not just the Aritzia brand. They have several brands in-house that they have under that brand. So, I mean, there's still, if everybody said, I can't shop at Aritzia anymore, you have to be careful. You have to stay nimble, but they've done a good job of that over time. And, you saw those valuations, despite the fact the stock is up, just under 300% in 6 years. It's not crazy valuations. And in this, if we were outside of a tariff environment, either the stock trades significantly higher already, or, it might be a buy if you're looking at, 2 years out at trading at 18 times earnings and growing beyond that in terms of earnings.
Mm-hmm.
Interesting company to watch.
One thing as well, like, this is so anecdotal, but when we were when we were in Vegas, I guess 2 weeks ago now, we were walking through Caesar's Palace, and, there's a big Aritzia store right there. And, like, I think we, like, walked around the corner basically, and then there was a Lululemon that was, popping up right around the corner, where it was like, popping up for, I think it was like winter, 2025 or something along those lines. Again, not that you can read anything into that, but I just think that, they've just done well with, placing their stores. And I mean, it shows with the same store traffic and just the net store openings that, they've been, big.
And I did note the Aritzia was busy. So that's always
yeah,
a good
exactly.
thing, right? So
yeah.
you always, it's funny. I'm always looking every time we go past. Is it? Yeah, it's busy.
Yeah.
And maybe if I go by and they're all empty, then it'd be a
sure.
time to get the hell away from Aritzia. But they every time I go near them, my wallet gets drained. So I know that there's some kind of they're doing something right.
Yeah.